Do the right thing. One of my favorite quotes from one of my favorite movies, Styles from Teen Wolf, the original 1985. Today we're gonna do the right thing. I'm gonna show you my 40 stock portfolio. We're gonna go over those. And if you guys stick around to the end, I'm gonna share with you a special tip for dividend investors. Let's get started. How are you guys today? Just got back from a nice walk. Glad you could be here. I hope everyone's healthy. And let's get started. So today I'm going to go over my 40 holding stock portfolio, which is fairly well diversified. I could be I have a little more holdings in one sector over another. But those sectors are materials, energy, real estate, healthcare, tech, consumer discretionary, industrials, utilities, communications, financials, consumer staples, and finally funds. Those are like the ETFs that I'm holding right now. So let's get started on that. Okay, so first holding we're gonna go over is Chubby. No, not Chubby or Old Chub, the beer, right? Give me a keg of beer. No, Chubb is the the global insurance company. They've been paying a dividend steadily for many decades. Currently, I'm down 45.87. Aflac, another insurance company. The name even sounds like the sound the duck makes. Isn't that funny? I always thought that was funny. Anyways, average cost $52.78. Johnson & Johnson, you don't get more blue chip than Johnson & Johnson, and I'm still down $14 on that one. AbbVie, another dividend aristocrat, a spinoff from Abbott, been in the news lately for their work with the virus, down $16.69. Pfizer, down $3.12. Leggett, they make mattresses and seat cushions, down $51. Coke, down $14. Pepsi, fractional share, I'm down a penny. I'm gonna invest more into Pepsi. I love them as a company. I wanted to invest in oil. You saw in my last video. And I got to spread it out over the months, slowly dollar cost averaging. Target, I'm down $34.39. Ford, $4.57. That was my very first dividend payer. And of course, it was the first and so far the only one in my 40 stock portfolio that has cut its dividend. General Parts, down $37.81. Donaldson, down $16.75. JP Morgan, down 3 cents. Dividend of a penny. It's another one of my fractional shares I've got to invest more in. Let's see, another bank on the East Coast, People's Bank, down $12. Wells Fargo, I'm down $26. KeyBank, I'm down $9.57. Realty, one of the higher quality REITs you can own, I'm down $28. I'm hoping the dollar cost average into that within the next couple of months. $28.68, I'm down WP Carey. I got a dividend coming of $1.04. Pay a good dividend, another good quality REIT to have. Stag Realty, $7. Chatham Lodging, I'm down $12. That's one of those travel and hotel REITs. I'm not sure I'm going to hold on to it much longer, but we'll see. Tinger, down $21. They've been hit hard by this whole thing, by the whole pandemic. They're a chain of malls that they've closed down. American Water, $2. I'm down $2. KMI, I'm down $4.86. Enbridge, it's a Canadian oil transport company, down $8.72. AT&T Communications, down $8.68. Nucor, I'm down $15.46. HP, down $22.01. CVX, Chevron, I'm up $4.95. Woohoo! There's a positive number up in there. All right, Chevron. Let's hear it for the X, baby. And then the other Exxon, down 25.50. Oh well. I've dollar cost average down. I was at $70. Now I'm down to $48. So I'm lowering that average. Makes me happy. Shell down $10. British Tobacco down $2.63. PSEC down $15.18. Apple, I'm down $4.18 on my fractional shares with $25 worth in there. Microsoft, I'm down 2 cents. I really need to expand on my technology holdings, and that's in the works too in the future. My funds, the Vanguard Total Stock, I'm down a penny, and VTI, I'm actually up $16. There's another one. Maybe I invested in that at the right time. It may have been the very bottom, but you can see I plunked in a good chunk of change there, and I'm up $16. So Noble, my two Dividend Aristocrat ETFs, Noble and SPHD, I'm down $15 and $13 respectively. INSG down. I'm up $7.43. That was a free stock I earned with a referral for one of my subscribers. Thank you very much for that. And Crestwood Equity, I'm up for 4 pennies, or 46 cents. So I'm pretty happy about that. Anyways, next we're gonna go over a tip for all you dividend investors. Let's get on to that tip. Okay, when looking at certain charts, and I'll pull it up here, you may have noticed the 5-10 ratio. The 5-10 ratio is basically, it has to do with a dividend's growth rate. It's really important because it shows you the growth rate over a 5 and 10 year period. Basically, the dividend is the speed and the acceleration is the growth rate, and the 5-10 ratio is the momentum. So how fast are you growing? How fast is that dividend growing? How much is that growing? I look at it as, let's say, a rock rolling down a hill has some decent momentum. It may have started off faster and slowed down a little bit once it hit the bottom. What about if you drop it off a cliff? It's going to start off slower, speed up. If you can find a stock with a 5-10 ratio above 1, that means that the dividend is growing faster, that it's not just a penny here, a penny there, that it's actually speeding up. It has great momentum. That is a good company to do further research on. Hey, if you like this video, give me a thumbs up, comment, subscribe. I feel like I'm getting a hang of this little by little, inch by inch. Give me a like, if anything, for Scott from Teen Wolf. Anyways, thank you so much for watching, and if you've made it this far, really appreciate it. Take care, guys.